Prior to his association with ARKA, he was associated with the Indostar Capital and Agen NV, the Dutch insurance and pension company. Mr. Amit Gupta, the Group CFO at ARKA Fincap, is a veteran in financial industry with 20 plus years of experience and was previously associated with Magma Fincop, ICICI Bank, and Indostar Capital. Mr. Gupta is a qualified company secretary and chartered accountant and is overall responsible for managing the treasury function of ARKA Fincap. Mr. Nachiket Naik is one of the founding members of ARKA Fincap and heads its corporate lending business. He has over 25 years of experience in the credit and debt markets and has worked in leadership positions with well-known financial companies such as IREP Credit Capital, UBS, ABN AMRO, and ILNFS. Mr. Naveen Saini is the business head for retail, SME, and MSME segment of the company and is responsible for building the retail franchise of ARKA Fincap. With 25 plus years of experience, he has worked in leadership roles with the Aditya Birla Group, Standard Chartered Bank, Barclays Bank, SIDBI, and Clicks Capital. We welcome the management of ARKA Fincap on the webinar. May now I draw your attention to the structure of ARKA Fincap Limited Maiden NCD public issue. The NCD issued are secured, rated, and listed. This is a tranche 1 issue of 300 crores, which is within the shelf limit of 500 crores. The current NCD offering of 300 crores has a base issue of 150 crores with a green shoe option to retain oversubscription of another 150 crores. The issue opens on Thursday, December 7, 2023, and is scheduled to close on Wednesday, December 20, 2023, with an option of early close on achieving the expected subscription. Allotment shall be on first come, first serve basis. NCDs to be issued pursuant to the tranche 1 issue are rated CRISIL AA- with a positive outlook. The CRISIL ratings were reaffirmed with outlook revised to positive from stable recently in October 2023. The issue offers NCD under 3 tenors of 24 months, 36 months, and 60 months, offering attractive effective yield ranging from 9.29% to 9.99%. Further, each of this tenor of 2, 3, and 5 years offer quarterly as well as annual interest payment option. All the 4 categories of investors, that is QIB, corporate, HNI, and retail, each have 25% allocation of the issue size. The issue also provides option to retail individual investors bidding up to rupees 5 lakhs to apply through UPI. I earnestly appeal to all our partners to reach out to maximum number of investors in all categories and provide them with an opportunity to invest in such an attractive offering. May I now request Mr. Bhandari, the Executive Vice Chairman and CEO of ARKA Fincap, to take us through the business, and later we can take questions from our partners at the end of the presentation. Thank you.
Thank you, Dipen. Welcome, my friends. Welcome to this maiden offering of the listed non-convertible debentures of ARKA, the financial services business of KOEL, which is a constituent of the Kirloskar Group. We are a young company. We will complete 5 years only in March 24. And so far, our journey has been very good, despite the ups and downs which had happened in the macro environment during COVID and other difficult circumstances. Company has been doing well, and we have stuck to our broad areas of focus business, which Amit will take you through when he walks you through the structure of the company and its various operations. As a Kirloskar Group company, it has been our endeavor, objective, and framework to adhere to the highest standards of risk mitigation, risk management, business growth, and most importantly, from a governance and framework so that we are able to live up to the expectations of all our investors and all our stakeholders. This issue, which we as the maiden issue, is hopefully the first of many more which the company would do as it progresses towards its guided goal objective of becoming substantially a principal player in the financing business in the SME, MSME space with corporate lending and real estate as the other two adjuncts. I sincerely hope and would like to welcome your constituents and yourself as an investor in our company, as we as the management team completely and working on a focused basis to deliver the results which all of you as stakeholders are expecting. May I now request Amit to walk you through a brief presentation on the company, after which we will be open for question and answer session from any one of you. Thank you very much and welcome to for joining us today. Thank you.
Thanks Vimal sir and Dipen for giving us a brief introduction about the company and the issue structure. Good evening everyone. On behalf of ARKA Fincap, let me welcome once again all of you to the conference webinar of ARKA was registered with a clear motive of creating an independent lending institution with diversification across multiple business lines. ARKA got its initial rating as AA- from CRISIL in 2019, and over the period of time, with its consistent performance in its assets quality and its profitability and other aspects, got the outlook revised from stable to positive. As on 30th September 2023, the external credit rating of ARKA Fincap Limited stands at AA- with positive outlook. Over a period of time, ARKA has been imbibing a high level of governance standards and business ethics from its legendary group, which has helped us in growing our AUM and delivering risk-adjusted return to its stakeholders. Promoter have infused to the extent of 1,000 crore over a period of time, and leveraging upon same, the AUM of a company currently stands at in excess of 4,000 crore. We believe we have formulated best-in-class risk practices, robust monitoring mechanism, and up-to-date technology framework, which is reflected in our assets quality, and that is why the GNPA and NNPA number are very negligible as on 30th September. The GNPA number only stands at 0.19% and NNPA stands at 0.05% as on 30th September. Not only on an asset side, but also on a liability side, the focus of ARKA has been remained very interactive from day one. As on 30th September, we have been associated with almost all large financial institutions of the country, whether we talk of private limited banks, whether we talk of public limited banks, large NBFC, other financial institutions, family offices. ARKA have been in touch with all the financial institutions and everybody has supported in the journey of ARKA to this extent. Standing on 30th September 2023, the loan book of ARKA stands at 4,033 crore, which is spread across three broad business segments, which is corporate lending, developer financing, and the major chunk coming from a retail lending that comprises SME and MSME lending as well. Over a period of time, we have embarked a journey wherein we have crossed almost 26 locations spread across 11 states. We have already onboarded more than 325 people over our journey. If you look the journey of ARKA Fincap, the company has been registering an AUM on a growth basis on a year-on-year. Year 1, we were only at 450 crore. Year 2, that is March 2021, the AUM stands at 1,123 crore, which again increased to 2,379 crore as on March 22. Taking it to 3,960 crore at March 2023. Standing on mid-year of September 2023 only, we are again at 4,033 crore. The net interest margin have been declining mainly as the company is growing and the leverage is kicking into the company. The company has been profitable since day one, whether we talk of March 2020 or September 2023, year on year, period on period, the company has been growing its profitability. Starting from a 7-year of profitability in year 1, moving on to 16.8 crore in FY 2021, which took to 32.5 crore in FY 2022 and 61.36 crore in FY 2023. We registered a PAT of 35.32 crore in H1 FY 2024. The net worth of a company has been increasing mainly because the promoter have been infusing a committed equity and deploying back of the entire profit. None of the money has gone out of the company, and the entire profit which has been generated over a period of time have been deployed back for its growth. Over a period of time, the company have been leveraging, which is the main mantra for any NBFC to grow. Even as on 30th September, the company is marginally levered only, which is 2.79x. However, considering the net worth of 1130 crore, the company is leveraged to the extent of 3153 crore, considering the leverage of only 2.79x. As I already stated, the GNPA number stands very negligible, that is 0.19% as on 30th September 2023. We know ARKA Fincap Limited is a 100% step-down subsidiary of Kirloskar Oil Engines Limited. Kirloskar Oil Engines Limited, which is flagship company of the Kirloskar Group, which needs no introduction. Kirloskar Oil Engines Limited has been into its genset manufacturing, CRISIL AA positive outlook, and CRISIL A1 plus for its short-term borrowing. The revenue, the profitability of a company has been magnificent over a period of journey. Last year, the company registered a turnover of 4,116 crore and a PAT of 270 crore. As on 30th September, the company has a market capitalization of 7,830 odd crore. If we talk about the sales and the profitability of a company, year on year, the company Kirloskar Oil Engines Limited have been registered a magnificent growth over its top line and both its bottom line as well. What we believe that the journey of ARKA would not have been possible without the continuous and the engaging support. I think just a minute, there is some technical glitch.
One. Sorry.
Yeah. What we were just discussing, that the journey of ARKA Fincap Limited would not have been possible without the continuous and engaging support and identified elite board members. The board members basically includes the 8-member board, out of which 5 are independent director. Mr. Vimal Bhandari, who is a veteran for the NBFC industry, is a renowned name, has been associated with us since day one and designated as the executive vice chairman and CEO of the company. Mr. Mahesh Chhabaria and Mr. Gauri Kirloskar represents more from a family. Apart from that, there are 5 independent directors who is driving the entire governance framework, best-in-class risk policies for the company. Talking about the business profile of the company, as we were mentioning that the entire AUM of the company has been highly diversified into 3-4 business assets class, starting from a corporate lending, then the developer financing, and the major chunk coming from SME and MSME lending. So as we see, as on 30th September, the entire book is segregated or geographically and segment-wise diversified across 3 different segments, out of which 31% coming from a mid-corporate lending, 29% coming from a developer financing and urban infra, and majority of chunk, approximately 40% of it coming from MSME lending and personal finance. The yield across the segment ranging between 12.4 to approximately 13.5, wherein we have been underwriting a loan starting from a 2-year going up to 15-year of tenure. Over the period of time, the company has been disbursing under the various segments, and the corporate and RE lending platform has seen its multiple cycles as well. Over a period of time, company has been able to disburse more than 3,000 to 4,000 crore across these 2 segments, and the outstanding book as on 30th September is approximately 2,500 crore, which represents that the company has seen the multiple churning cycles within the period. While growing with the SME MSME lending, if we see the disbursement number, it is continuously picking up, starting from a 444 crore going up to 10,000 crore, and H1 FY 2024 itself, we have registered more than 701 crore of disbursements. We talk of a digital disbursements as well, starting from a 30 odd crore going up to 120 crore and 74.5 crore approximately within a period of a half year of journey. Under SME, MSME lending, the company has been spreading its wing through Tier 1, Tier 2, Tier 3 kind of cities, basically into the North, South, and West India, covering about the hub and spoke kind of a model, leveraging upon common infrastructure and the best-in-class technology that is available with us. We believe that the growth in today's era is not possible unless and until the technology is being levered. We have adopted the best-in-class technology with a low-code, no-code, agile applications and SaaS-based support system. From day one, the loan origination system, loan management system, accounting, web portal, HRMS, everything is going live and all are internally interconnected through the API integration. One thing which we feel very proud about the asset quality. Although the company has been 5 years old almost, we have been able to disburse more than 7,000, 8,000 crore over a period of a time, but have been maintaining its asset quality, maintaining its collection efficiency, which is, we believe it's better than the industry standards. And that is reflected in its GNPA number, that is only 7.37 crore, which reflects 0.19% of GNPA. While we talk about the asset side altogether, now moving on to the borrowing profile. As we were talking about, over a period of a time, company has been able to leverage its balance sheet, which is the main mantra for any NBFC or any financial services institution to grow. Starting from March 2021 to September 2023, the company has grown its liability franchisee up to 3,153 crore, spread across more than 30 institutional and HNI lenders, which splits across various instruments of banks and into term loan and working capital cycles, NCD issuances, including certain portions under MLD structure, then the continuous flow of a CP, that is the commercial papers as well. The company has been adequately capitalized, or I must say that more than adequately capitalized, even standing today, wherein we are registered a CRAR of 27.59% against the minimum requirement by the regulator is 15%. There have been a regular capital infusion by the promoter over a period of a time, starting with 27 crore, and then over a period of time, the ultimate capital infusion on a cumulative basis stands at 987 crore. The one important aspect we would like to highlight on this chart, which is on the right-hand side of the screen, is the ALM mismatch. This is one aspect which we believe that any financial institution can go bust, but what we have adopted the best-in-class practices that will never go negative into these buckets. We have always been following a positive ALM mismatch strategy since day one, and that have been continuing till today as well. Improvement in the profitability metrics, if we have to see starting from the first day of operation, the performance, the financial performance of the company have been increasing on a year-on-year basis, which is being closely monitored, and one of the factors that the cost to income of a company is also coming down. If we talk about the pre-provisioning operating profit, starting from a 25 odd crore moving on to 88 crore in FY 2023, and then within 6 months we are registering a 64.8 crore of a pre-provisioning operating profit. Yes, the NIM is coming down mainly because of the leverage is kicking in. If we talk about the profitability, that is profit after tax, as we have already highlighted, last year we registered 61.36 crore of a profit. This year we are already for the 6 months standing at a 35.32 crore, and another 6 months yet to come. These going ahead are the financial performance numbers which we have already discussed in the previous slides, but I will just run it past you for your reference and record purpose. In case any number you want to drill upon, we are open to discuss that in the open forum of a Q&A. I'll just run it past for your ready reference. This is the asset side of a balance sheet. This is the liability side of the balance sheet. Before I hand over back to Dipen, to highlight the issue structure of ARKA Fincap Limited, I would like to say, just to conclude, that ARKA Fincap Limited has been backed by a stable promoter group, guided by elite and distinguished board members, which has helped us in following a high level of governance, and there have been stable leadership team to focus on one common goal of the company to deliver a risk-adjusted return to its stakeholder. From here, I am handing it over back to Dipen to define the issue structure and the parties involved into the process. Dipen, over to you.
Yeah. Thank you, Mr. Bhandari, and thank you, Amit, for the repetition again, but I know I will just reiterate the issue details once again for the benefit of those who may have joined late. The NCD issued are basically, these are the secured, rated, listed and redeemable NCDs. The issue size is for 300 crores with a base issue of 150 crores and a green shoe option of another 150 crores. The issue will open on Thursday, 7 December and is scheduled to close on Wednesday, 20th December with an option of early closure. The rating for the NCD issue is CRISIL AA- with a positive outlook and carries a security cover of 1.1 times. We can just change the slide. Yes, thanks. Allotment shall be made on first come, first serve basis. There are 3 tenors offered in this issue: 24 months, 36 months, and 60 months maturity. Each of the tenor has an option of either quarterly interest payment or annual interest payment. And finally, the NCD offers attractive yields in the range of 9.29% to 9.99% maturities. This is as per the issue is concerned. We will also mail you and send you all the details regarding the issues. We can now take the questions. Yes, sir. So the first question is, understand there is a decline in net interest margin of the company from FY21 to 23. Any particular reason for the same?
Sir, the NIM of a company has been declining mainly because the leverage is kicking in. If we are talking about the NIM, always it is better if the NIM is declining. But parallelly, if we see, the spread of the company has been kept intact, which is ranging between 3.25 to 3.5%. The NIM will keep on declining because as the company will lever, the borrowing will kick in and the interest payment will start kicking in and the company have to repay that. So while calculating the NIM, the interest income minus the interest expense comes. That is why the NIM is declining. As the AUM have been increasing, as the borrowing have been increasing, the NIM is bound to decrease.
Yeah, so the second question is, for real estate and urban infra lending, tenor is shown up to 36 months. Can these loans be of tenor more than 36 months?
Sir, internally, we have adopted a policy wherein we are underwriting a loan basically ranging between 24 to 48 months. However, the average tenure of the loan we underwrite is 36 months. But what we have seen already that there have been a prepayment into this category and our loan gets prepaid within a period of 18 to 24 months itself.
Okay, thank you. Yeah, the next question is, can you provide bifurcation of digital loans and non-digital loans? Maybe I think they are asking. Yeah, sorry. Yeah.
Do we need to answer about the numbers only? If I'm not wrong.
Maybe in percentage we can just give a broad idea. Otherwise, we can't go in details. Yeah.
Okay. So as on 30th September 2023, as the retail book stands at approximately 1600 odd crore, out of which 80 crore stands at a digital loan, wherein we have been tied up with various digital lending partners and we have been growing that AUM. Apart from that, 1520 crore is a non-digital piece.
Okay. The next question is, what's your overall exposure into unsecured loans?
Standing as on 30th September, the overall book into the unsecured lending does not exceed 12% of the total AUM. So if we talk about a 4,000 crore of AUM, not more than 480 crore is into the unsecured piece. However, we call that unsecured mainly from RBI perspective, but we have some kind of a comfort or some kind of a intangible collateral available with us.
Yeah, thank you. Yeah, so the next question is, the financing industry is becoming increasingly competitive. So what strategy do you have in mind for the company's future growth? Do you plan on introducing new products and services for the customers in the future?
This is Vimal Bhandari. We recognize that India is a large market. There are a lot of players, but the potential for expand the footprint is also very large, given the way the economy is moving. So from a narrow ARKA perspective, if I may to say so, our aim and objective is to spread our operations into Tier 2 and Tier 3 town and to provide financing needs based on various requirements. We have started with secured LAP and business loan, but over a period of time, we would be introducing more products as with passage of time. So your point is right. We would be introducing newer products, but first we want to consolidate our position in the LAP and unsecured business loan category, which in our view will take another 24 months.
The next question is, what will be ARKA's Fincap strategy to compete with increasing competition?
Sorry, can you repeat the question, Dipen?
The question is, what will be ARKA's Fincap strategy to compete with increasing competition?
So the strategy for increasing competition, like in any other sphere of business, is fourfold. First and foremost, we want to invest and be a technology savvy company to give a superior customer experience. The second is to try and meet different life cycle needs of our borrowing constituents so that as they grow, we also grow with them and start taking a larger part of the world. Thirdly, as the operations of the company increases, there will be a net reduction of operating costs to the income, interest income, and that will enhance the overall earning. And the fourth is that once we have reached a certain size, we will be doing a lot more direct sourcing and direct interaction with our customer to be able to enhance our overall earning pool. So these are some of the strategic directions which the company is taking towards remaining and being in the upper percentile of the earning curve.
Yeah, so the next question is, where will be the funds raised by this public issue used? I can answer this, sir, as a lead manager. We have defined this in the prospectus filed with the SEBI that 75% of the public issue money raised will be for onward lending, financing, and repayment of interest and principal of existing borrowings of the company, and the remaining 25% for general corporate purposes. That had been already defined in the prospectus filed with SEBI. Okay, so the next question is, what are your views on the recent RBI guidelines to increase the risk weight of unsecured loans? Does it have any material effect on the company?
So 16th November 2023, RBI issued a circular stating the banks to enhance the risk weighted on the NBFC. Namely, what we believe that RBI has come up with this circular because of increasing consumer credit exposures in the market. We have analyzed our portfolio both on the assets as well as on the liability side. Our exposure to the consumer credit segment is not exceeding 20-25 crore as of 30th September, which comprises not even 0.01% of the entire portfolio of the company. On asset side, there have been no significant impact, or I must say there is not even a marginal impact on the CRAR or on the asset side. However, on the liability side, what we have been given to understand so far, there have been no impact from any of the bank on our liability side. Since our exposure is more towards the secured credit, maybe for a future borrowing, there can be marginal impact of 5 to 10 basis because they have to increase the capital charge to the extent of 25% only.
Maybe I think so this is the last question we can take. Yeah, this is the last one. So what are the constituents of corporate lending? Is it just working capital loans or some other contributes as well?
Yeah, sorry, this is Nachiket here. As far as the corporate lending business is concerned, we work with well-regarded corporates who have a strong track record of both operational and financial performance in providing financial solutions. So it could be working capital, it could be growth-related loans that we give them. So primarily, as against other lenders, we try and help a borrower grow his business and provide him a financial solution which meets his requirements more specifically than generic loans that he gets from other sources. So in that sense, yes, it's a mix of various bouquet of end users that the borrower uses our loans for.
Thank you, Nachiket. I think we have answered all the questions well. And, partners, we have heard about the company in detail from its management and looking at the attractive offering of the ARKA Fincap Maiden public issue. May I request your wholehearted support by reaching out to all the segment of the investors. You may reach out to the issuer, lead managers, or consortium members for any further information or clarification. I once again thank you all for taking time out to attend the session, and we shall look forward for your wholehearted support as has always been the case. Thank you. Thank you, friends. Thank you, Amit. Thank you, Mr. Bhandari. Thank you, Mr. Saini, and thank you, Mr. Naik.
Thank you very much.
Thank you.